Hello everyone. It is February 21st of 2022. It's President's Day. I hope everyone has enjoyed their long weekend. I do realize, some people, including me, still have, the masonry doesn't stop due to President's Day, and I know a lot of jobs out there doesn't. So um, this video is just about the SPY. I want to share some of my charts with everyone and talk about some of the things that I mentioned in the Discord and my market outlook. This first chart, this is a daily 6-month chart. You can clearly see we are in a descending channel. We are below the 200 MA, and this is now resistance. We're watching the 431.89 level here. It's one of our levels on our Weeble, on my Weeble that we watch. We played right to it Friday perfectly. Then the 426, if we take that out, we're watching 426, then 420. Of course, the fibs, they're on Weeble, they're not here. So I mentioned this morning about a head and shoulders pattern, so I want to point that out and talk about it a little bit. This is a 1 hour, 5-day chart. I just keep track of the trading ranges of the day just to kind of give me an idea. Like that's 2 days. You can see how tight the trading range is. But that candle should have showed us should have been letting us know we're heading into a bullish day. News headlines, it just didn't work out that way. Pulled back. Kind of not what we're talking about here. All right, this is the head and shoulders that I mentioned this morning. Head and shoulders works. They work better in a bear market. Currently, the SPY is not in a bear market. Now, there is a lot of stocks that are included into the SPY that are in a bear market, but the SPY itself is still in correction territory. As mentioned, we are below the 200 and we are vulnerable there because, because we are below the 200. You can see we have been moving on bearish volume. The symmetry of this head and shoulders reduces the probabilities. This neckline down here, if I was to zoom out to a weekly chart, you would clearly see with the Bollinger Bands on it, this neckline is actually at the bottom of a BB's, the bottom of our Bollinger Bands, which that acts as support. So we must test and breach this level to confirm this head and shoulders pattern. That could put us moving down another 12%. It could be a little less, a little more. That just would be a textbook move off of this head and shoulders pattern. And like I say, this symmetry does take some of the probabilities out when you're angled like this. Would prefer to see it angled up or straight. Angled down is not the ideal setup. So let's go to the next chart. So this is a SPY daily 5-year chart. Just want to point out some of the bearish volume here. Or some of the volume in general. This is the COVID crash compared to what we're at now. You can also see we are below all our major moving averages right now on the daily. This chart was included into the market outlook. Going to proceed on to the next chart. I watched several charts here. Alright, so this is a weekly 5-year chart. You can see we have we're back below the 50. We have breached the 50 once, the time when we went down to 420, and we pulled back up. You can see this Bollinger Band here will act as support. If you were to draw a line, you can see a support level right through here, and that's actually where we're at. The Bollinger Bands and the MAs that we use actually help you spot these support resistances without having to draw them. Helps really well for new traders. That's why I use a big reason why I use the setups that I use. It's mainly to help you guys. You can see we are starting to get, the volume is starting to build up a little bit here. Let's go to the next chart. So this, alright, this is a monthly 10-year chart. So here you can see clearly, alright, in March, this only goes back to 2002, but in March we had a .com bubble, and that is not on the chart, but in October of 2002 we had what was called the market downturn. In 2007 and 2009 we had definitely bear market. This was the financial crisis. 2010, which in my opinion we had never really fully recovered from here. We had another flash crash. 2016 they had what was considered the market sell-off. To me this is more just a correction. Wasn't nothing like this, as you can see. 2019 was considered the crypto crash. And you can actually see that it affected the stock market as well. This is COVID come back down, found the same, pretty much the same support levels right there. We had pulled back to our 50 here. And you can see, like here, we pulled back down below the 20. We breached the 20, below the 20. So we are now below our 9. I would not be surprised to see a pullback right here to the 20 once again, and that would put us at 400. I mentioned a level at 399-ish, 400-ish the other day on Saturday during when Eddie asked me about the SPY during the streaming event that we had. I want to point out, see how your angle of ascent here, this is nice and healthy. You know, it gets a little peak here and you pull back, you know, getting a little stretched here, you pull back. See the angle here is parabolic. This is what my whole market outlook and my whole, since November, I've been saying how the market's changing. You can see it coming. When you go parabolic like this, that's a sign that a trend change is coming. Like anytime you see a nice healthy uptrend and then it starts to go parabolic, that's letting you know you're getting to the end of your nice healthy uptrend has come to an end, and you're getting to the end of a trend itself, of the trend itself heading towards a trend change. Now this is a trend change right here. We just consolidated, then we continued. We consolidated, we continued. This is considered a trend change. We reversed again. So a trend change does not always mean a crash. But I can easily see us coming back to 400 here. I'm not saying that's what's going to happen. Let's watch and see if the head and shoulders plays out. So right now, you know, we're going to concentrate on 420. We take out 420, we're going to concentrate on 400. So we're not just going to jump ship, you know. I'm not saying that if you wanted to go out 30 days and grab a 400 put, you know, find something cheap somewhere, something like that. I'm not saying that wouldn't be a bad idea, but stay on the cheap side of things. You know, don't go and grab something crazy. We're not sure exactly what's going to happen here. I want to go out. This is a chart that I keep track of some different type of levels that I need to finish up for the week. Anyway, I have two or three charts that got in the way. I want to go back real quick. I can't help myself. This is Splunk. This was a strong stock at one time. When it dipped off, bad earnings, everybody was buying this. I remember this. I made bank on this stock actually. Um, when the earnings come in and it sold off, it opened up, and I was able to trade some of this and did really well. I traded the downside of it for a while. Had several. I mean, it wasn't an everyday thing, but I had several different downside trades on that and did really well. But this is one of the reasons why I say, buying dips, and everybody started buying here, thinking, oh, it's going to come back here. When this was happened, they started buying again, thinking, oh, it's going to come back here. And it may someday. They just don't always come complete, right straight back. That is a year chart, something like that. There's a year. This is a year and a half chart. So the people that were buying right here are still bag holding. Dips are just, it's not a strategy. It's not a strategy. You may have gotten lucky buying the dips of the hot stocks, but the leaders will be different coming out of this. This is a daily 5-year chart. This is not the chart I'm looking for. Here we go. This is a 10-year weekly chart. Once again, we talked about some of these crashes, but I just wanted to give you a different look at it. This is a weekly look instead of a monthly look. We talked about how we had pulled back to the 50 here. So if we were to take out 400, remember the fib level or the moving average level on the weekly chart, if we were to take that out, then we could easily possibly come way down here. It's a possibility. And I don't want to say it's not. We don't know what's happening. We don't know, inflation, Russia, recession. Charts show we're not heading into a recession, so I'm not really, different angles to different ways you look at things. But charts do show that we are not heading into a recession. Anyway, I just wanted to give you guys a look. I mentioned sometimes about the angle. So you can see, how once again we've started getting parabolic there, and it's just a signal. You can see we pulled back here in October and we're able to recover, but that right there was a sign saying, hey, I'm changing. The market's changing. Hey, the market's changing. You could almost get a head and shoulders out of that right there, which is basically, actually you can, that is the head and shoulders we're looking at. It's just hard, a little harder here. You don't have much of a gap there to get into, but that is the head and shoulders that we're looking at right there on our daily chart. Alright, I want to get this video loaded up. I have some more stuff to do for today, for the Discord. Have a good day.